Hello, everyone. Right, well, I thought we're going to talk to you this evening about unravelling the mystery of productivity. But for those of you who don't know me, I thought I'll start by introducing myself and A4G. So we're A4G Chartered Accountants, and the A4G stands for Accountants for Growth. We're based in Kent, but we work nationally because we pick up a lot of our business from referral from clients and people we work with, like Linda, who understand that we do things a little bit differently to other accountants and we like to be a bit more involved. So I'm Emma White. I'm one of the partners at A4G, and I head up our cloud accounting department as well. We're dedicated to owner-managed businesses, providing advice, support and planning. We've got a team of 50 in the practice. So whilst we are a medium-sized accounts practice, we have a proactive two-man approach to every client, just so that you get that close working relationship and we can make sure that the plans clients have are implemented throughout everything we do. So before I start, we'll be answering all your questions at the end, but obviously you've got the Q&A box, so do pop your questions on there as we go through, and we'll answer all those at the end. So explain myself, and then we've got Linda, who actually specialises in helping people recognise what their current productivity levels are and how to maximise those for the benefit of the business. So I'm going to talk to you about cash flow and cloud accounting, but I'll start with knowing your break-even point, because that's been something that we've spent quite a bit of time on in the last year for businesses. As you can imagine, it's been a bit of a tricky 12 months for most. So one of the things that actually a lot of people tend to forget when calculating break-even is really looking at the plan of what you sort of want or need to earn as the owner manager, and then working that backwards through the calculations. So we tend to look at things like monthly costs, what your other income is, what your income is for the business, and how that breaks down. We'll then add in things like dividend tax and corporation tax and work it. So we actually work bottom up, so net income to you, and then build it back up. So I'm going to take you through that calculation. So you'll see there, on this assumption, we've said, right, we need £30,000 dividends to us. So that's the 30 before tax. So we then add in the tax, get the profit before tax, and build it all the way up there with overheads, gross costs, cost of sales and turnover, to give you kind of your annual turnover figure to be able to achieve what you want to achieve. And then we work quite closely with clients on then helping to break that turnover figure down into like an annual daily turnover, where we'd look at the number of working days in the year, and then we'd come up with an annual daily target that just means that you can monitor it. If you do sales on a daily basis or weekly basis, we break that down with you, taking out the bank holidays and stuff, just to help set some more achievable targets. So as I said, we'd look at, with the annual average daily turnover, we'd look at dividing your annual turnover by the number of working days, so that discounts bank holidays and things. So that drills that £197,000 down into a daily amount. And then we compare it to the weekly figures like every Monday with clients. So we've done quite a bit of work on this with clients over the current period, especially helping to try and assess with furlough and everything, like what labour resources you need. Otherwise, that does affect your profitability. But obviously that is quite contingent on getting your financials right first. One of the other things that has been absolutely vital is the knowing your cash flow. So we've got a little 5-minute cash flow tool, which we set up for clients, where we will look at the balance in the bank accounts, maybe some money held in deposits, if there's any lending or overdraft facilities that that you can use, just so that you know the entire pot that is available to the business. So in this example, there's £50,000 available. And then we would work through the liabilities that are accruing, that are a bit of an unknown. So particularly the company tax bill. So we like to work with people on what we think the tax bill will be, how often it gets paid, and then the months until the payment is due. So that gives you an idea of, you know, in a perfect world where you have money set aside in pots for everything, you know, what would you need at this point in time to settle those liabilities? Now, this isn't done to try and scare people. It's done to give you an idea of where you are, and used monthly gives you a tool to monitor your cash flow patterns in the business. And it also gives you an indication if you're running into problems. So particularly if you've got things that are due annually, and you're getting closer and closer to that annual payment, and any deficit is getting worse and worse, like, you know, you need to speak to someone about this cash flow. You know, do you need lending, or are you going to need a time to pay arrangement? So that's the idea of it. It's not, you know, it's not to make you feel bad about maybe using some of this money to trade on temporarily, because a lot of people do use sort of tax money to help generate income at the current time, or fund stock, or whatever needs to happen. But this is to just, you know, to help you keep a foot on it. So we'll look at any arrears and anything that you've got built up, and it just gives you that final balance. But really, this is something that we would always recommend we do every month with clients, and we build it in to annual patterns. So you know, it's always good if you run it for a number of years, you can see if your cash flow is improving over the years you're building your business. So the next thing I want to talk to you about is streamlining your finances. Now, why is this important? It's really important, you know, if you want to start looking at productivity, first you need to understand your numbers. And quite often, accounts are used as a tool for us at the year end, and they don't necessarily tie back to your costing that you do when you quote customers, and so they don't really mean anything to you. Sort of the margins on them and stuff, they don't tally up for whatever reason, and they just become a bit disjointed to how you feel about the business. So part of what we try to encourage people to do is make the finance process as easy as possible, so that you can keep it up to date and really use it as a tool for your business. So there's a number of accounting softwares out there, and one of the softwares we recommend the most, not always, but probably the most, is Xero, which is an online cloud accounting platform. Now, the reason we like it is because it helps with kind of our view about speeding up the finances. You know, they've put some really good things in to just help make it all work a little bit quicker and better for your business. So if any of you haven't got it, it's definitely worth a look. So what we do is help clients look at obviously speeding up their invoicing and payment process, because that's significant for the purposes of cash flow. So we'd look at online invoicing, so using your accounting system, having a template that can be issued quite straightforwardly once work is completed. Linking online payment methods to it, so it just makes it really easy for people to click a button and make the payment to you. And then you can also introduce their sort of automated standard debtor chasing. Now, what that does is it's almost like polite persistence pays, and it just makes sure that despite how busy your internal finance person might be, or yourself if that's you, some of the things just happen on a regular basis. So one of the things I love about this is it will send, you can set it up to send a copy of the invoice a few days before payment is due, and just say, just to remind you, this is due for payment on Monday, and please can you make sure it's in your payment run. You know, that's very polite, because you don't know, they might have not received the first invoice. You know, give people the benefit of the doubt. But that just makes sure that they definitely have had that copy of the invoice. And then you can set up a little chase that's, designed by you, all the wording that just says, this is now past the credit terms. Please can you make sure it's in your next payment run, or give us a call if there's any problems. So it's just all really polite, and it just makes that process a little bit easier and frees whoever does the finance up to do the more difficult things in their job. So what we would actually recommend, there's a few apps that kind of link into Xero really seamlessly that are absolutely brilliant in terms of improving efficiency. So Fluidly is one of those. If you've got if you raise a lot of invoices, you might need more than just Xero's automatic chasers. So Fluidly is actually a credit control and cash flow app, and it helps you schedule your cash flow based on what people are telling you, and it also helps prioritize your chasing based on the value of the debt. So that is an automated credit control chasing, so you can set up those automatic chases and they will combine it. But also, say your credit controller rings Bob owed you £1,000, he was due to pay it yesterday. Bob tells you that he's going to pay it next Monday. You can put that in your system. It will remind you to check on Monday that Bob was good for his promise, but also it will move that money into your cash flow to arrive on Monday. So, because obviously with a lot of cash flow sort of predictions, you're almost assuming everyone pays on a certain payment date, whereas this is really working it out based on your customer patterns as well. But it helps you have an effective to-do list for debt chasing, which I think is really important at the moment. The other way to improve efficiency is obviously to automate your kind of purchase ledger side of things, which is all your supplier invoices. Now, there's a couple of apps that work with Xero to help you do that, and they basically automate data extraction. So what I mean there is, if you have an invoice that comes into your email in PDF, you can automatically forward it to, we work with what's called Dext. You forward it to that software and it will read all the data on the invoice. It will put a copy of the invoice into the system with the transaction. So if you ever need to look back and find invoices or have a little look at why your costs have gone up, they're all there. But it also means that if that invoice was for building materials, and that is what that supplier supplies every month, every time that invoice goes through, it will go to the same place. So it helps with your consistency on your accounting records as well. You can also scan, take photos, and it's got a fetch function where certain suppliers have allowed it to link up with their data so that you can just pull the invoices directly from those systems. So it's just all designed to make it so much easier. Then you've got a way of expense claim management as well as part of that. And actually, depending on the size of your business, it might be that you have a process for approving purchase invoices. So you wouldn't necessarily want them to go straight into a software that processes them. You'd want them to go through the path of approval. So, back in the day when we all used to be in the office together, that might just have been a bit of paper that got passed around the office and signed in a box by various different people. But actually, Approval Max is an app that would sit alongside Receipt Bank, which is now called Dext, and they work together. So the invoice would go into Approval Max, it would go through the same chain of people, all via an app for approval, and then into your accounting software. And you can do that for sales invoices and purchase invoices, depending on what approval you need and how many people it has to go through. So they're really designed to just be a bit more efficient and avoid the delays of things sitting on people's desks or having to wait till someone's in, or you know what it's like, we all spend a lot of time on our phones anyway, so those few things are often done while people aren't in the office, or when they're on the go or traveling potentially. But that's just really important to help get it all in there, and then give you a bit more time to just review what those numbers are showing you. Now, one of the typical things we find with accounts is where people aren't using their account system to tie up to their costing. It means that quite often all the expenses end up in overheads, which isn't really the case. You have 3 types of expenses. You've obviously got your cost of sales, which can be directly linked to your sales invoices. Then you've got your direct costs. Now that might be your wages or machine hire or anything that tends to go up in chunks, where you bring a person on, they can do X amount of capacity, then you've got to bring another person on. So they would end up in your direct costs, and then your overheads are for things like your photocopier, your office, your receptionist, the things that don't really change too much between doing £1 of sales and £100,000 of sales, say. So it's really important to get that right, because that, I know Linda will be nodding here. So if you get that right, that's how you start to sort of map out your finances, and you can start to see where your margin isn't quite your margin that you cost through. And quite often that might be the case because of a lack of productivity, or just reduced productivity, or waste. And then you can really start drilling through. So looking at the reporting is really, really important. And the reason I love Xero is actually the reporting side of things. I can be a little bit geeky when it comes to the reporting, but it's because I'm really passionate about clients getting what they want from the account system, rather than just using it for my benefit. So you can track your projects and departments really easily. So you can kind of have this 3-way reporting, where you can look at your business's profits as a whole. You can break it down by activity type. You can break it down by salesperson. So it means you don't have to just look at one summary number like you might do on the end of your accounts and think, right, well, we do a lot of different things. How do I know which department or which activity is my most profitable? You can get that from the system. So it's fab. You can also look at month on month. So you can look at January compared to February, but you can look at actuals versus budgets. You can also look at prior year. Now, prior year is one of the reports we always build in for our clients into their accounting systems. And the reason we love it is because, as you know, some months are just short months. So February is a short month. December is always a tricky month, isn't it? I think everyone goes into holiday mode by about the 10th, and things slowly wind down. So actually, if you were trying to compare December, which is a really holiday heavy month, with November, that's often a full 5-week month, it just doesn't give you a good comparison. Whereas if you can compare this December with last December, it just gives you a much more accurate comparison, and then you can see if you're beating sort of the targets you've set and improved on the year before, which I think is always really, really important. And you can actually customize the reports for whatever you want. So Xero has a dashboard function, so anything that's really critical data for you can go on the login screen. So when you first go in there, it will give you your numbers. So if you wanted to track your marketing spend, or your debtors report, who owes you money, or cash flow in and out, all of that, you pick what's most important to you, and that can go on the login screen. So that is why I love it. And it's got really easy integration with industry specific apps. So there's tons of them, hundreds and hundreds of apps that Xero consider the back-end accounts function, but these are designed around how you run your business in certain industries. So just there's some lovely apps out there depending on what industries you're in, and I won't pretend to know them all, but the ones I've had experience of have been really impressive. So it's more than just an accounting system, and I really want businesses to use Xero as more than just an accounting system. So A4G, how can we help? Well, We do quite a lot of Xero setup and training for clients, which will bespoke to what you're looking for. We also, if we take on a Xero client, we do a bit of a review process and check the efficiencies of how you're using the system, what you might like to improve. Quite often we pick up things like not all the bank accounts are linked, or there's a little trick of how you can do something a little bit more efficiently. And then go from there in terms of building out proper reporting. We have our 5-minute cashflow tool that can be downloaded from our website, and we help clients with how to implement that. Most of our clients have a pre-year-end business planning meeting, which usually happens 6 to 8 weeks before the year end, and we work with them on really what they're hoping to present to what the figures look like now, what we're expecting them to be at the year end. Are they looking to save tax, or are they looking to gain finance? Sometimes they're very different sets of accounts. What's their plan for the coming year? And we try and map all that out, and it gives businesses 6 to 8 weeks to kind of implement any of the planning. And then we've got some of our clients that work on a breakthrough service, which we have a lot more interaction with on a monthly basis, where we'll be setting forecasts and plans and having regular meetings to kind of hold everyone, and that might be members of their team as well, accountable to the things that they needed to do to move the business forward. And so that's clients that are really trying to drive their business for the purposes of sale. Okay, brilliant. Well, thank you very much for having me. I'm going to hand over to Linda, and then I look forward to some questions at the end.
Thank you ever so much, Emma. And good afternoon, everybody. I'm Linda Garcia from Luxi Consulting. Can I just check, can somebody give me a heads up that the title page is showing okay? I'll take that as a yes. Luxi Consulting, I have a background in the management consulting arena. I spent 15 years traveling the globe, offering productivity improvement programs to large corporate international organizations across 3 continents. And I brought that expertise back to Kent, and I now offer and work with the ambitious business owners in the SME arena here in Kent, bringing all of that global productivity expertise to my home ground. And this afternoon, I want to link into Emma's talk and work through a little bit about productivity for profitability, but from a more operational perspective. So Emma has obviously introduced the idea that if you want your business to be breaking even or even paying you dividends, and she's used a figure of £30,000 in that example, that is obviously dependent on your business generating the turnover that your business plan has stated, with the resource and the cost of sales, so the salaries that you need to produce your product or deliver your service. And if those numbers don't meet, then you're going to be eroding your profits. So productivity is hugely vital in monitoring it on a day-to-day basis, so that when you get to the end of the month, you have reached the required sort of level of profits and your net profit does start coming through. So you've probably all heard on the news over the last decade that the government has been really concerned that productivity has been dropping year on year. We were actually at one stage about 20 or 25% lower than our G7 counterparts in the productivity stakes. So the one conclusion that I have drawn, and from my experience in all of the businesses that I've helped and worked with over the years, is that productivity is essentially broken. And we need to start building back up in the UK and understanding what it is and how we can actually improve productivity in our businesses that will then make our businesses more stable, give us the profits that we need to achieve the lifestyle that makes it all the hard work worth it, but also give much more stability to the workforces out there. So I'm going to start off with a little bit of background as to why do we need to focus on productivity, specifically in relation to people. and I know that productivity can also be on stocks and supplies, etc., but I'm going to focus on the people side of things, as that is normally the highest cost in our business, is our salary bases. And I'll start off with a few statistics that came through from an organisation called salary.com, who carried out a survey across 750 employees as to whether they felt that they were wasting any time at work or not. And of those 750 employees, 88% confirmed that, I probably waste time. So then the survey started to explore a bit more as to, well, how much time do you feel that you waste? And of those, of that 88%, 47% of them estimated that they wasted at least an hour a day. And that was the lowest amount of time that they admitted to wasting. Which, given that then maybe 20% admitted to wasting 2 hours and another 5% admitted to wasting 3 hours, there was actually 2% that admitted they're probably losing about half of their working time for various reasons, which we will go into shortly. I thought, let's just stick with that minimum worst case scenario, or the least worst case scenario of, right, let's have a look at that 47% that have admitted to wasting that hour. Because that actually represents just 12.5% of their working time if we base that on an average 8-hour day. So that in itself is starting to indicate that employees know that they have more potential to deliver more work for the company. So we then probably need to look at, why are the employees feeling that they have wasted time or available time or lost time, whichever context you want to put it into. So the top 3 reasons that they gave for wasting time, the highest reason was that 53% of those respondents thought that taking short breaks increases productivity. Now, there is an argument to say, yep, that's right, but what is the employee's perception of a short break? And if that starts to add up to an hour a day over and above tea breaks and lunch breaks, then that starts to become quite worrying. The second problem is 35% of the respondents identified that they were bored, they lacked motivation, or they're dissatisfied with their job. And these are things that we can start to do something about. And I'm sure that when I put up that question of what were the top 3 reasons why employees waste time, you were probably thinking in your mind, well, it's probably because they feel they weren't paid enough. But this is the enigma insofar as only 2% of those 750 people considered that they wasted time because they're not paid enough. So that actually indicates that money is not the problem. Money is not the main driver or the main issue that the employees are feeling. So we have to look at other ways, and what are the challenges that the business owners face to try and get employees to be more motivated to do a better day's work, really. So the key challenges, and I've got a series of blogs on these, fall into 3 things. One is the challenges that the owners and the managers of the business face. The second thing is the business systems and the information that is available in the business to determine what are the levels of productivity. And the third one is then what impact that has on the employees. So for us, the owners and managers of our businesses, some of the key issues that I've witnessed when working in, especially in the SME arena, the first point is that most owners and managers don't really understand what productivity is or how to measure it. So that's one of the giveaways I'm going to be introducing you to this afternoon, is giving you an overview of what productivity is. Secondly, dealing with people and working with people can be quite a challenge in itself. Especially as a small business, if you've come out of a large working environment and you decide to set up your own business, you might not have been given the skills or had your management capabilities developed. So many owners and managers don't want to rock the boat and challenge poor performance and ask somebody, well, why have you stepped away from your desk for the last 20 minutes? Where have you been? What have you been doing? Why are you sat on your phone doing personal texts or looking at Google online, etc. So that is an issue that people need to learn how to overcome that. And a lot of it is about engaging employees to want to focus on the task at hand and not be bored or have, you know, a lot of job dissatisfaction. And the third point is that owners and managers, we don't feel comfortable, or we may not have the skills to confront individual employees when the issues are starting to come to the surface and causing real problems. So that's the owner and managers. From the business perspective, and getting the foundations of the business working for you so that you can be measuring and monitoring the productivity, again, the key challenges that I witness, and this is what I work with company owners on, is that very often the business lacks adequate management systems to work objectively. And what Emma's presented this afternoon is, you know, the main things that most business owners use is their financial data at the end of the month. But unfortunately, by the end of the month, or even 10 days after month end, which is normally when, you know, the management reports are coming out from the financial information, it's then too late, and possibly 4 or 5 weeks after the inefficiencies or the productivity drops have occurred, and there's nothing you can do to go back and correct that, or take corrective action and address the problems. So solid management control systems are required so that you can work objectively, and they also take away that gut feel, that perception, and you can start working on objective, fair and factual data, which actually drives employee engagement much more than getting the wrong perception about somebody and then managing them according to your perceptions. Secondly, the business lacks the correct KPIs, the key performance indicators, to monitor performance and productivity, so therefore we can't manage it. I have one blog where I use the phrase that if you take care of the KPIs, the pounds will look after themselves. So if you're monitoring operational indices, such as, you know, what output have we had today, how many calls have the salespeople made, what's the average order value that they may have taken, and is that going to meet our targets for today rather than our monthly financial results, then that will in turn produce the results that you want financially at the end of the month. But it requires that there is management and supervision happening on a regular daily and weekly basis, not waiting until 3 weeks after month end for the financial reports to come out, only to find that your salespeople didn't have enough sales going through at the start of the previous month. So that's the business systems and information issues and problems that many companies face. And lastly, the impact of those two issues on the employees. They very often don't know what is expected of them. You know, if there's no planning or target set goals and objectives that have been translated from your annual or monthly financial goals into something meaningful that an employee can tangibly understand. You know, I'll use the sales scenario again. If you're going to generate maybe £250,000 worth of sales this month, then we need to achieve 70,000 or 80,000 in the first week. And that means we might need you to do 20, 30, 40 calls a day. And we'd like you to convert maybe 75% of those and get an average order value of about £350. That type of thing is setting people very, very clear expectations of how much work they need to do in order to achieve the company goals. Therefore, they don't know, if they don't know what's expected of them, they won't be able to tell whether they're being productive or not. And ipso facto, they're going to carry on as normal, thinking that everything's okay. And going back to that survey of people admitting to wasting time, if they're not being challenged on their achievements and their goals, and managers aren't working with employees to help them succeed and be better at their jobs and produce and be more productive, then they're going to think, yep, we're doing well, nobody's confronted me on anything, so I'll just carry on as normal. And that's where that hour of wasted time perpetuates itself and becomes part of the job and embedded in the culture, and everything starts to slide downwards into a very sort of grim pit, and productivity fails, productivity drops. And that is what the country has faced over the last decade or so, since we've been trying to pull ourselves out of the last recession. But there is light at the end of the tunnel. And to start to give a little bit of a feel for what is productivity, I'm going to start with the basic equation, which then needs to be put into context depending on what your business is, what your people are doing. But basically, it's output over input. And I'm referring back to Emma's numbers. Output is your turnover, your sales invoicing, over the input, which is your cost of sales, or let's keep it simple, the total salary cost of the labour force that you need to produce that amount of work that is generating that invoice. So that's a very simplified equation of what productivity is. Now, there are three levers or three ways that you can influence how productive your business is. And this is it's real common sense. It's not really rocket science. So in the first instance, if we take the green arrows as the output, what they're actually producing or how many clients they're processing, etc. And the pink arrows are your inputs, how much it's costing you to produce that. If we keep a consistent volume of work going through, but we can actually reduce the cost that it is requiring to service that amount of client or produce that product, then that is going to be obviously increasing the ratio and giving you greater productivity. The second scenario is that we get the same amount of resource that we've currently got in our businesses to be producing more. And obviously this is my preferred option, because that means we're not going to have to make staff redundant or adjust the crewing forecast for the future. And I don't guarantee it, but I say to most business owners, I can pretty much guarantee that there will be capacity in the business. It's just getting people to recognise what the barriers and the blocks are that are causing the output to not be able to increase, for people to perceive that there is not enough capacity in the business. And then obviously the third scenario is where we do both. If we can reduce the input costs and still produce more, then your productivity was probably pretty low to start with to achieve this scenario, but that is the third lever. So it all stems around knowing and measuring what are our outputs and how much time and energy people are putting in to produce that amount of work. So to put that into perspective, looking at how do we measure productivity, there are sort of a whole plethora of words that are bandied around, but I'm going to demonstrate through an average day's work, and here I've got up to 8 hours that we are paying our staff. So if we took this as one person, and you will have all heard of the various different ways of measuring. So I'm going to demonstrate to you what is the difference between utilisation, efficiency, and productivity. And they are all related, but very often these get confused and people think that, well, my people are 20% utilised or 50% utilised, therefore that's my productivity. It isn't. And this performance measurement is something that every business needs to get clarified and use this tool in your own workplace. So let's start with utilisation. If you have got somebody that is sitting at a desk working away and they are probably active or that busyness for 6 of their 8 hours, and this doesn't include breaks or lunch times, so this is 8 paid hours, that means that you have got 2 hours of the day that they have not been busy, they have not been producing for you, and that represents their utilisation level. So that's 75%. But of that 6 hours that they were active, that busyness might not necessarily have been them working in an efficient way. So if we take that 6 hours that they were busy and active and say they should have actually been able to have produced that amount of work in 4 hours, then we are now seeing that they have reduced their efficiency. They've lost another 2 hours worth of potential for working more and producing more, and that is then the measurement of efficiency. So they have worked 67% of the potential efficiency that they could have had in that 6 hours that they were actually busy. So we're starting to see here, the big red boxes is the opportunity that exists within the business to improve. And then to multiply, obviously, the utilisation by the efficiency, that is what gives us our productivity. And the productivity is the time it should take to do the work. So that's the 4 hours that was required to achieve the work that they took 6 hours to do. And when we compare that against the input, the hours that we've paid that person to do that work, being 8 hours, that then really starts to drive home, where if you're not measuring your productivity, you're not going to know how much opportunity you've got to be producing or delivering more in your business. And that actually demonstrates that based on these figures, the productivity was actually only 50%. And I appreciate these are theoretical numbers, but I have spent many thousands of hours in the field, out in the workplace, in the offices, in the factories, observing people working over my 20 or 30 years in the consulting industry. And this is not far off reality. That is quite a bit of a drastic one, but there are normally where people are not being managed and supervised positively and correctly, this is the type of impact it has on the output of their work. What is that then costing your business? What is the cost of that hidden opportunity? Well, I've translated those figures into this little chart that shows the utilization, efficiency, productivity, and the hours worked, which I've described as their busyness. So that's 6 hours busy for the utilization measurement out of 8 hours paid. That's the 75%. So the inverse, the opportunity that we have to improve and reap more benefit to the business, is 25%. At the opposite end of the spectrum, we've got 50% opportunity if we were measuring productivity rather than utilization. And this also demonstrates that just measuring how active people are is not the best measurement, because that doesn't mean to say that they were working effectively and efficiently. So that's why it's important to be understanding your utilization, your efficiencies and your productivities. Now, if we translate that time into the hours lost per year per person, and I'm basing this on 1,950 paid hours a year, which is roughly 40 hours a week over 48 weeks, because we're giving them a holiday. That translates in terms of the productivity level to nearly 1,000 hours of potential to produce more. And if we take an average salary, I think at the time of putting this together, it was about £28,000 per year cost to the business. That's about £18 an hour. So that lack of productivity has cost your business for one person possibly up to about £17,500–18,000 annually. That is almost the cost of a junior admin person or one full-time equivalent in your business that you are losing if you're not managing the productivity and measuring the KPIs on a regular basis. And obviously, depending on the size of your business, if you've got 10 people in your business, that is costing you around £170,000, £180,000 a year. That is the value of looking at the productivity in your business and starting to try to uncover the opportunity, find out what is the causes of the low efficiencies, the low utilizations, and addressing that to really start to give your business a boost. So what I'm going to offer now is the 3 takeaway solutions, a bit simplified, obviously. It's putting it into practice always takes a little bit more time than 5 minutes in a presentation, but I'm going to give you 3 ways to boost productivity. And I'm going to get into the detail of why it's important to set time standards for people, why you need to define the scope and quality of work that you're expecting from people, and how to plan your resources, or why you need to plan your resources to ensure that your productivity meets your financial goals and you get that £30,000 dividend that we started off with Emma's talk on the finances side. So let's just take the time standards. Standards is a really old-fashioned word, and depending on when you started your careers, I do remember the days of men standing out on factory floors in white coats with a clipboard and a stopwatch measuring people working. It doesn't have to be quite so archaic these days. There are a lot of softwares and technologies out there where you can get your people to be monitoring and just logging, especially if they are working for a client-based project work. You want to know how much time have you spent delivering that project to the client. So we need to know what is the time that is budgeted for a piece of work. And as sad as it sounds, yes, time has to be a key measurement. That there have been sort of management theory and management trends over recent decades have suggested that we can't keep people time focused. Well, we can't, but that might be one of the key reasons why productivity in the UK has become so poor, and we're becoming less competitive in the world, because we're being a little bit too laid back about making people produce a certain amount of work for a certain amount of money within a certain amount of time. If they're not achieving the work in that time, then your budgets and your profitability are just going through the floor. So we need to have budgeted times. It doesn't need to be to the second. People need to be given an idea. Well, you know, I really think you could get maybe 20 or 30 calls out in the next 2 or 3 hours. It's as, you know, as basic as that, but it gives people an idea of what is expected of them and a level of performance that you are expecting. We need to have some sort of recorded time. And again, in industries such as accounting and in the solicitors, there's always the joke about, oh, they're charging you for every 6 minutes. Well, yes, they are. And why do we think that the accounting firms and the solicitors and the lawyers are so profitable? Because they're making sure that people are focused on delivering within a certain amount of time. And that's not to say that quality has to suffer, but we'll talk about that next. And then there has to be a level of monitoring and controlling the work that is being done. And this is where managers and supervisors have to engage with every individual employee. I work on the basis, and I talk to managers and business owners and say, every single one of your employees deserves a one-on-one meeting, whether that's 5 minutes or half an hour or an hour, once a week minimum. I would actually do away with annual performance reviews. I think in a year, is no point going off to somebody and saying, oh, last January you were performing really badly. It's something that should be continuous, but the manager should be working and monitoring and controlling every single employee to help them succeed, not to slap them over the wrist. And it's that sort of process of gradually training people as to how to work within the business and setting the company way that will get employees motivated and not thinking that they're bored and that they don't feel that the company values them. So that is the how you approach your people, which is a whole nother presentation. But the monitoring and controlling is all part of a solid management control system. And then when you are doing that monitoring and controlling, you review with them. How did that go so well? What did you do that we could actually maybe let the rest of the team know? And if it didn't go well, what could we do to help you refine it? What tools or training do you think that you need to help you do something better? Or is it something in the way that the process flow is working? Is the workflow poor? Are you wasting time? Are you waiting for something from somebody else? That is the type of dialogue that the monitoring and controlling in a management review meeting should be, so that you can then refine the process and get the standards being improved on a continual improvement process. So the tactical management approach is so important in helping to boost productivity. Secondly, people need to understand what is the scope and the quality of the work that is required. And I've got an example here, a case that I worked with in a small web design agency, who the business owner could not understand. Excuse me, I'm going to have a drink of water. Why the developers were spending so much time on what were purportedly fairly simple websites for clients who had just gone sort of onto the first level of their web design. And when the business owner started to sit and actually get into the detail with the developers, he realized that they were trying to write and code such a complex and over-the-top code software for a website that didn't need it. And he had to explain, look, I know you want to do your best, but this is not what the client are paying for. So he started to realize that he had to define the scope of the project and let the developers know that the client is paying for this. They don't need to have all of the other sort of bells and whistles on the end of it. And if they want that, we'll ask them if that's what they want, and then we can at least charge them for it. But by those developers working on something that was so over the top, it meant that they were only getting 1.5 projects done a week instead of the 2 projects or the 2.5 projects that the owner was expecting from them. And therefore his profits were eroding and he couldn't understand why. So explaining scope and quality in terms of the time, versus the money versus the quality. Involve your employees in understanding for every job what the client expectations are, and make sure that they understand how they need to be delivering on that, so that you keep it within the productivity levels that you're expecting. And the third point is to plan your resources. And again, I'm going to use that same case study of the skills. You need to be thinking about what are the level of skills required. And going back to that same case, in the web design agencies, and I've become a jack of all trades and a bit of an expert in this now, there are senior and junior developers. And the senior developers are obviously able and capable of designing and coding much more sophisticated software than the juniors. So in this particular organization, the owner was paying for a senior developer, which is quite an expensive role with on costs and, you know, costs of the company, etc. It's about £35,000–40,000. But the actual amount of senior coding and developing that was being done was only about 15 or 20% of that individual's time. So the other 80% of their time was being spent working on much lower quality or much less complex coding. So the business was actually paying a £40,000 salary for 80% of that work to be a junior developer's role that would have cost the business maybe only 20 or 25%. So the owner in this particular case took the decision for that very small amount of senior development work that was required. He would take that on himself until the volume of work had picked up. Sadly, obviously, the senior development role was not required, so that became redundant, but then recruited a junior software developer, and that saved the business nearly £20,000 a year, and then put in much better resource planning to make sure that the skills that they required in the business matched the type of work that was coming through. So that sort of is part of that planning process, is you've got to plan the ratio of skills that you've got in your business according and match it to the mix of projects or the mix of products even. So this applies equally to product as it does to service. And the other key thing in this sense is you've got to keep your employees interested. So a senior developer continually doing junior development work was soon going to get demotivated anyway, as their skills and capabilities were not being stretched, which is what people want. So you've got to make sure that the labour resource that you have is being motivated, that they are interested, that they are finding it challenging in an enjoyable way, and that they always see that their skills could be further developed, and hopefully the company would give them that opportunity to do just that. So they are the three key areas that I would suggest: is set standards in the time, define to your employees the time, the money and the scope and the quality to keep them in scope of the project or of the work, and plan your resources to make sure that you are achieving that productivity level that will at the end of the day help you reach your dividend payout, which is what we all get out of bed for in the mornings, isn't it? So that's a little bit about productivity. If you would like to check and test how the propensity of your own business is, I've got the Luxide Business Success Scorecard. This is completely free to complete, and it's quite eye-opening if you are honest and open and honest when you complete the survey. But you can discover the hidden opportunity that you might have in your business and unleash that profit potential that's in your business. And to complete that, you just go to aluxide.scoreapp.com. It takes about 15 or 20 minutes to go through, but grab yourself a cup of coffee or a cup of tea, sit down and just dedicate time to that. And then the email PDF arrives straight in your inbox with your scores in 10 different areas of your business. So have a go at that. You might find that opens up new areas that you'd not thought of, and I'd be really happy to then have a discussion with you. An hour's breakthrough call is what I normally schedule with clients, so that's something that you can do. If you'd like to read a bit more about productivity, you can go to my website, aluxide.co.uk/downloads, and one of the books that is free to download there is My 20 Ways That Productivity Can Pay for the Living Wage. So there's a lot more case studies in there, live examples of what a lot of people don't expect as to where productivity improvements can come from, and that will help you find out the areas of your business that you can adjust to pay for that living wage increase. Obviously this was relevant when the living wage is going up every year. So that's me. I'm Linda Garcia. There's my contact telephone number and my email if anybody's interested. Please feel free to tweet me on the Luxi Consults and have a look at the website. And now we'll be taking any questions. If you wanted to pop any questions up in the Q&A box, I'm going to escape the presentation if that's okay.
Thanks, Linda. That was amazing. Funnily enough, you will laugh. We monitor obviously time spent on clients, and then we have two other categories for the downtime. We have developmental and non-developmental. Yeah. And actually, that's fairly significant for us, because the developmental is obviously we have to do quite a bit of training and things to keep everyone up to date with changes in all sorts of things. And we do a lot of systems and processes internally to make ourselves really efficient. Our non-developmental is stuff like sickness, IT issues, and office and filing. So we monitor that, and actually we have an absolutely slick system for power cuts now as a result of that, because we're basically, the village is on top of a hill, and it's got its own weather system, and power cuts have, funny enough, not during lockdown, but normally under normal circumstances, the power just goes on a regular basis. So we can get our office of 50 staff back up and running within inside 20 minutes with generators, lights, and all sorts of things. Just because
you've got your contingency procedure.
Yeah, but because we were monitoring it and we knew the cost of a power cut and anyone standing around idle, so we've got a process that people know what to do in that 20 minutes. You know, organise their desk, shred paperwork, you know, whatever it is get themselves a bit more organised. And we've got a team that know that it's their responsibility to get out those lights and generators. So it just shows you, though, don't you? Because we realised the cost of that for monitoring it, and we found a really good solution for it. So
pleased to hear that. Good.
A lot of what you said really resonated with me. So that was absolutely fantastic. Actually, one of the questions that's been raised is, what percentage productivity should I expect from my team? Like, what do you think is acceptable? Because I think we all know, you know, there's an acceptable level of chatter maybe, or downtime, but it's how you gauge that, isn't it?
It is, and it's interesting because that would be completely dependent on the business, the activities that are being done. I mean, I could go from one extreme to another. I consulted to a massive petroleum plant in South Africa, where they had one operator on the shop floor, and this was an almighty sort of industrial place, and the operator would literally just have to check 5 dials once an hour. So their productivity was about 2%, but the business couldn't exist without that operator being on the shop floor. Going into sort of a more an environment that most of us could relate to, in an administrative arena, if somebody is sort of desk-based working on a computer, I would expect about 90%, because if you take that 10% downtime in an 8-hour day, that is like nearly the hour that these people have admitted to wasting. But they're always going to need to be the toilet breaks, the over the drinks cooler breaks, etc. And that is where you would build into your budgeting for your salaries that, well, we're going to expect about 10 or 15% of downtime over and above breaks. I always want to, ensure that is short, because breaks are not normally paid for. So this is within the paid time. So that's a sort of an administrative environment. In more active arenas where it can be quite tiring, then you'd be looking at maybe 80 to 85%, because people are going to need to sit down more often. But it is, it's very dependent. And also, it's also down to the business owner's decision. They might be happy if they've got 20% unproductive time in the workplace, but the pricing that they then design for the services or products that they're giving to their clients have to reflect that. Otherwise, that sort of reduction or the unproductive time is going to be costing them on their bottom line, which goes back to your budgeting. So this is where, in the business planning, if the business owner hasn't taken into consideration how much work one person can do, then the rest of the business plan goes to complete ratchet, because you're not taking into consideration your productivity levels. So there's no perfect answer. It very much depends on how are you pricing, what are you prepared to, you know, allow for your employees, and how much they're costing you as well.
Yeah, absolutely. And I think that is where quite often it's like the business owner is paid last, isn't it, in the kind of scheme of things. And I think you're absolutely right. It's having that balance of what you think is acceptable,
and the other thing
to be damaging the money that is due to you as an you know,
and the other thing I do see
owner.
frequently in the SME arena, and the point that you've just made, that the business owner is normally the last to get paid, but they are normally the person picking up the pieces. If their team aren't getting the work out, they'll be the ones staying behind at night, you know, racking up the hours to 8 or 9 o'clock, because instead of managing their team better, they are then becoming the overspill resource to get the work through when their team have clocked off at 5 o'clock or whatever. And that is why management is far more valuable. Learning to manage people is far more valuable than just picking up the pieces of that inefficiency in the team.
Yeah, absolutely. I think you're right. It's often the business owner that does have to make the apologies, you know, lose maybe one of their favorite customers, have the stress and the additional hours for these things. So it's getting a balance, isn't it? It's making sure that the team aren't having a jolly lovely day and the business owner's working till 10 o'clock every night to allow his.
Necessarily the fact that the team are being lazy. It's that if they're not being managed and they don't know what they're supposed to produce, or what the, you know, what an acceptable level of work is, then they're not doing anything wrong. It's just that they're not being given their expectations, you know. So they, as I said at the start of the presentation, they all think everything's great, nobody said anything, I must be doing okay, and I think I'm working at a good pace. But what they think is the good day's work might not be the business owner's equivalent of a good, you know, a good day's work, good day, bad day scenario.
Yeah, well, and the danger is you can lose some really talented people, can't you, because they're not being challenged enough. I think that's the, you know, if they're not being challenged, sometimes they'll go somewhere else to be challenged more, because they haven't had that clear that clear direction of what is expected from them. And
that's why 35% of those survey respondents said, well, I'm bored, so I waste time. And reading that, this was the salary.com survey, if anyone wants to look it up online. It is actually quite scary, some of the higher percentages of wasted time. One of the reasons was that that they didn't get on with their manager, which always, you know, starts to demotivate people. And that is why management now has to be a helping people succeed relationship, not beating people on the back because they haven't produced enough sort of relationship. And that's where I'm trying to bring 21st century management techniques into businesses, rather than the old 70s style, you know, just cracking the whip management by walkabout, which was normally swearing at everybody syndrome. So but I'm conscious of running over time now. Was there anything?
Yeah, no, I think it just depends on the personalities as well, doesn't it? Some people are better with the with the stick.
And
some people are better with the actually the fact
that is why every individual team member should be reviewed separately, because the manager has to get to know what makes each individual tick. Team meetings are fine for delivering information, but for encouraging and managing people, you've got to work with the individual, because everybody will work differently, and a good manager will understand the foibles and the strengths and the weaknesses of each of their team members and play to that to get the overall goals and objectives.
Yeah, exactly. Well, I've got a question here that says, actually, how do I know which figures to look at? And I mean, I don't know about you, but I think most people start with overheads, because it's like, oh, it's really easy to get a re-quote of insurance or whatever it is. But you know, when we look at what you were talking about, actually that's really small scale, isn't it? I always think you should be looking at the gross profit, you know, element, you know, influencing your turnover, your cost of sales and your direct costs, and quite often your staffing is in that direct cost. So I would always, I don't know about you, but I would always tend to try and influence the above gross profit elements before, because you can have anyone can review overheads, you know, anyone can read broke insurance, or, you know, if you've got someone who's a bit idle, you could ask them to do that as a one-off project or something. But actually to drive that profitability element, that's where, as an owner manager, that's the bit I would be taking charge of and paying an interest to. So have we got any more? So we've got a few more questions about, are there any quick and easy ways of monitoring how much time someone spends on a piece of work?
Yes. So I've got an answer for that. Did you?
Yeah, no, go on.
Yeah, no, and I've been using, and a couple of names on the screen of participants might have heard me talk about this before, but I am a massive fan of Hours Tracker. It's hourstracker.app.com, I think. It's got a little pig symbol, and I've been using that for 5 years. It's an app on my iPhone. I think you can get it for Android and you can get it for PC screens, but that allows you to set up jobs, and you literally tap the screen to log in, tap the screen to log out. You can also set it so for people like maybe delivery drivers or people out in the field visiting different clients, you can set it so that it's got GPRS logging, and if you set it to within sort of 5 yards of your client's front door, it will automatically clock you in when you go in and clock you out when you come out. But that is one of the most powerful ways, little apps that I've used. And then you can set up things like how much time have I spent on my accounting or my emails or my business administration. So that's for sort of people like us running around in different places. But for desk-based jobs, then yeah, similar thing. Some of the softwares, I know that I can't remember, Trello, Scoro, they all have mechanisms within the softwares themselves to tell you when somebody logs into a specific project or a task and log out again. So there are softwares out there. Otherwise, it can sometimes need to be a very simple process of getting somebody to just be writing it down on the side, you know, on a pad somewhere, or putting it into a spreadsheet. Now, that isn't ideal, and over a long time it can start to become less and less effective. But maybe to do it for a week every month or a month every year, just to keep people focused on the fact that, well, let's just check how long that's taken us now. But I think any company that is delivering a project-based product or service to a client, they would be charging their client based on their estimate and a forecast of resources that they're going to be paying to deliver that. So I just saw Tim's question pop up on the screen as well. So, and you need to make sure that those people are spending the right amount of time on those jobs. So Tim, I think that answers your question about how to set productivity expectations if you're employing freelancers. Your freelancers' pricing needs to reflect how long you expect them to spend on a job. Now, that might not initially be perfect, but if you do start to get logging on how much time is being spent on each client for a specific type of project, you can then use that as a standard moving forward. It might need to be tweaked, but you've got to have a starting point to measure how long does a specific type of piece of work take.
Yeah, absolutely. And I think you're absolutely right, Linda. The key is to start something, isn't there? Is to just start asking people to occasionally reflect at various points on their day how productive they've been. And I think if you start making people a little bit conscious of that reflection, you know, even if you don't necessarily need to charge it to a job or monitor the projects, it just helps with that awareness of them to think, you know, well, actually, I've not had a particularly productive morning. This is what I need to do in the afternoon. But there are some wonderful apps that you can break things down into whatever sort of amount of time. You know, try not to make it too complicated, I'd say, to start with. Just because obviously the more complicated it is, and just raise awareness with staff that this isn't because you're suggesting that they're dishonest. You're just trying to get into a habit of that reflection on productivity, and you just want some open and honest feedback about that.
And that's why I'm very keen to make sure that people understand that managing people is something that you have to be trained in. And I mean, I offer, as a Luxite, the Leadership Management Development Program, which is not just the sort of ILM and IOD soft skills, how to, handle conflict and negotiation and confrontation. Well, if you manage in the Linda Garcia or Luxite style, you won't have a lot of conflict and confrontation, because you'll be learning how to set people's expectations. So there's, it combines the technical management side of things with the tactical skills to, in my definition of a manager, is to help people succeed in their jobs, and succeed is defined by what your company goals and objectives are.
Absolutely. Plus, I always think if you've got those clear objectives of what you're wanting them to achieve, and a little bit of reflection on their time, it doesn't become a personal conversation. I think that the danger of not setting someone expectations and not monitoring their time is it feels a bit personal, doesn't it, to say, I don't think you're particularly productive. Whereas if they've got a clear goal and they're not meeting it, you can talk about the reasons why they think that is, and it becomes about the productivity rather than about the person. And I think that's why most people avoid those conversations, isn't it? Is because it feels personal. It feels like you're accusing someone, and that's either being lazy or rubbish or whatever. And
no, those aren't words we're allowed to use in management these days. You can't say they're lazy or rubbish. It's like, there's a problem here, there's a block, there's a barrier, what's causing it, but I call that depersonalizing the whole management process, in terms of not confronting and suggesting that people are being lazy or whatever. But that is where, if you have a strong management control system that delivers the numbers to people, this is the plan, now we need to know your actuals, and it makes it objective, fair and factual rather than gut feel and perception, that changes and shifts the whole balance of whether this is, it's just so-and-so's being a right old, bastard this afternoon, really treating me like whatever, but changes it to, my plan, I'm not on plan today, I've not managed to achieve half the stuff I was supposed to do because I've been chatting or paying my bills on online or whatever. And it really does make people start to not be able to blame management or take it that management is just picking on them or being discriminatory. It's no, the business system is this is our way, it's the company way, not the manager. So that's why I do think that depersonalizing things and not making it the manager's issue, it's a company requirement, really strengthens that manager-employee relationship.
No, brilliant. And I think we'll do one quick last question about how do you keep on top of productivity during lockdown and teams switching to home working, which I think is tricky, isn't it? And some people are automatically more productive at home and some less. So it's probably having a bit of a balance and a way to manage that.
And this again, it's a double-edged sword. You're going to get some people who cannot self-manage themselves in that home environment, and you're going to get other people who have gone so over the top. And my blog this month is all about it's about burnout, where employees have taken it on themselves to just be available 24/7 because that's that fear of missing out, isn't it? But in answer to the question, which is Lucia, it is about regular checking in and taking time out to get together with the employee on a Zoom, sadly, or telephone, and setting their expectations. There's a method that I use. It's the three, what went well yesterday? What are you planning to do today? And what is the one thing we can pat ourselves on the back for? And it's just that little bit of connectivity, a little bit of conversation around them, the employee, and focusing on, what can I help you with today? Let's just fix one thing that you're going to do well. And so that is the key to managing people remotely. And I mean, it makes me smile sometimes, because when I was in the international management consulting arena, I would be, and this was like in the 90s when the internet didn't exist, we didn't have emails, I'm going to really age myself here, and I was managing teams intercontinentally. So I would be sitting in South America managing a team in South Africa, all by telephone and fax. And because we had to speak to each other, because there was no other way of doing it, you couldn't just email a response, it wasn't a problem. We had massive success because you are having that personal conversation and always having to interact. So I just spend my morning on the phone instead of on Zoom calls that we do now. Yeah. So it's not impossible, but obviously the world that we've moved towards now, people have been used to being able to get into offices, and 95% of the workforce need to be in the shops, etc. It's not ideal to be working remotely on your own in a home environment. That's why I strongly believe that working from home is not going to become the norm. It will be stronger. There will be a much bigger shift towards hybrid, and we are going to need to train managers and business owners how to manage their people in that new environment. But I don't think it's going to be the be all and end all yet.
No, I think you're right, but I think also there'll be a bit of a switch between kind of hours you do in a day and productive output, because actually I'm probably a believer that if you can achieve, if you're a person that can achieve what you need to achieve in a day in 5 hours, you don't really need to work 7, do you? But I think it's having a very clear, to do that, it's quite drastic, but it's got to be very clear what is expected,
and this is also
for the money they're being paid.
I think that is going to create a lot of price rises. And there's a lot of companies that I've spoken to, small SMEs in the Kent arena, who are saying, yeah, we only want to do a 4-day week, and we're gonna work 4 days but pay our people for 5. But if you're working 4 days, you're going to have to put your prices up by 20% to cover the salaries, because you're not producing 5 days worth of work. Or are the employees going to be producing the same amount of work in 4 days rather than 5, and therefore start to be stretching themselves? Is it going to be burnout, or is that just taking up that slack and absorbing that slack into 4 days that was costing the company 20% more because the workers weren't being as productive as they could do? Now it's not only going to be building into 4 days, but the company is only going to have that 1 day that is not available now to produce the same amount of work. So I think they're going to have to take it up in one of 2 ways. Their profits are either going to reduce, or they're going to have to put their prices up to maintain their profit margins. So that is a very dangerous world in that sense as well. So whichever way you look at it,
it's hard to get a sense of reality, isn't it? I think as well at the moment.
Whichever way you look at it, the profitability comes from balancing your inputs against your outputs, and if those tweak, then your profits are going to be affected.
No, exactly. Well, that's why I'm so passionate about reporting and actually using it as data to consider these things, because like you say, that sounds like a really lovely idea, but is the impact of that going to be monitored properly? I suppose you can let us know next time we do our I'm sure we'd love to do another one of these, because I think actually the numbers and productivity go really, really well, don't they, together? So we thank everyone for joining us this afternoon, evening, and we hope you've all found it really useful. I've really enjoyed it.
Thank you. I've popped up the luxiscoreapp.com URL in the chat box if anyone wants to go on and have a look and see how their companies fare.
Brilliant. Well, thank you all.
I appreciate the invitation. Thank you.
Enjoy the sunshine, everyone. It's actually sunny and a little bit warmer than it has been, so maybe a nice glass of wine or a cold beer this evening, everyone. We will be sending a copy of the video out to all.
Some handouts if you want copies of the presentation I did today. I'm happy to send over the handouts. I'll send them to Amanda.
Yeah, well, we'll send some links and things with it as well, so the links to the scorecard and stuff, copies of the slides too. But really appreciate you all taking the time out of your day, and look forward to seeing you at the next one.
Okay,
brilliant. Thanks everyone.
Good night everyone.
Bye.